to some investment strategies and picks with Mish Schneider, Director of Trading Education and Research at MarketGauge.com. Good to see you, Mish. Thanks so much. I've been thinking of you throughout the last several weeks when you sat and we were talking and you said, I bought some ARK, and I almost fell off my chair because, you know, that was a bold move at that time. It was really out of favor. And I'll tell you, in 1 month, I don't know where you got in or what got out, but in 1 month, ARK is up 14%. So you must have did a good job with that, right?
We did pretty well. It's a scary fund to be in right now because where the SPY and the Qs have had a nice move up, ARK is basically still kind of flatlining. But we actually got out. We made some money, but we got back in today. Yeah, we have a pretty, basically the whole market right now, whether you're going long or short, and we can talk about what we're looking at, you have to have a pretty nimble approach to things if you're not one of these sort of investment fund long-term traders like we are not. So what we basically have been doing has been much more nimble. And so ARK is a perfect example. We had got in around 42. We took some profit up around 46. We got out of the rest around 43. That's how tight we're playing it. But we got back into it today. So we'll see. But again, if it breaks down under 43, we're gone. We're not sticking around too long. So it's kind of like the kind of thing where you have to get in, you have to hope you get the instant momentum, and if you don't, why sit around with dead money if you're more of an active trader like we are?
Right, understood. Well, congratulations. I had to make sure to congratulate you on that call because it did work. Now, how about some other areas? Precious metals, is that something that you're watching?
Well, yes, and so we bought gold right pretty much after it cracked. Once it held 1680 in the spot gold price, we got in the GLD at around 160, so we're making some money there. Again, defensive in that we've now gone to a no-loss stop. So basically, if it gets back to where we got in, we're gone. But we're looking at a move up maybe higher from here. There are some people who are saying $3,000 gold. I don't know about all that, but we certainly do have some geopolitical things around us that are concerning, obviously China being the hottest new topic with Taiwan. And gold, of course, is going to react well to the dollar dropping and the yields falling. And if for some reason there's any kind of perception, or I should say further perception, based on this whole idea of skepticism that the Fed knows what they're doing right now, I think you can see another positive move in gold for that. And it's the same reason why we bought silver too, which sort of has a dual purpose, right? Silver could be speculative for inflation, but it also, in terms of EVs and industrial uses, is a reason for it to be there too. And it also got so cheap. It was almost like you could not buy it because you knew where you were wrong so quickly.
Right, right. And as you mentioned EVs, I was thinking about Ford and Tesla, and we've seen Tesla running up, right? So you're not touching those right now. You feel like they got pricey?
They got pricey right here. But one of the things that I wish I had done was right after Tesla reported, I'd even written a whole report for a newspaper I write for in London that said if Tesla got through 765, it was a buy. The low the day after it reported, was 764.90, right? But I said it was going to go up to a 900, which it basically did. So now we need to see some kind of settling down. And the same thing with Ford. Once it broke 13, I was looking for about a move to 16. Well, we're close. So right now, if you miss the parameter of getting in, and this is the kind of market we're in, and it's too close to where your target is, you don't start getting in at that point because now your risk reward is all out of line.
Right, understood. So at this point now, too, and I know you have consumers, staples, and biotech, so just tell me quickly on that before I get to some strategy. Okay,
well, with the consumer staples, obviously we had the terrible earnings report in Walmart, and it's popped back pretty well. Target, I saw, got an upgrade today. So even though there is excess inventory in some of these places, there's still a need for real assets here, and no one should get too complacent about inflation being over, because clearly anything could happen to wreck that. Besides the geopolitics, we obviously have a situation, too, with Mother Nature. You can't be alive now and not realize some places are flooding, some places are on fire, some places have major drought. So that's why we feel like with the consumer staples, it could go back into favor, and along even with utilities, because interest rates have come down. But in terms of the other areas, besides EVs, I'd like to buy a dip on. Solar energy has been hot. Obviously, the package potential with Manchin and Schumer is a reason, but that would be another place. And then just talk about biotech since you mentioned it. That's really can take an advantage if the market kind of sells off. It could actually hold because it's more non-cyclical in nature. It could actually almost be considered a real asset in essence, in that people need their pharmaceuticals no matter what. So we've stayed out of IBB for now, but we're watching for it to take out 125 and stick. And then maybe that would be a good play more defensively as well.
Okay, all right. So now at this point, with the trend that we've been seeing in the market, because you said it's hard to be in the ARK fund. I mean, there is a lot of volatility, and that's why you have points that if it goes down, you're out. You'll even take a little loss, but you're not going to get crushed on the other side. That being said, stocks are up 3 days in a row. Looks like they're going to snap it, at least for right now, but up 3 of the last 4 weeks. When you're doing this strategy, like the ARK fund, like some of these other sectors, do you stay in these sectors for a few days, weeks? Names, specific names, do you get in and out pretty quickly? What's the strategy?
Well, that's a great question, Nicole, and a lot of it has to do with the actual macro, right? So if you're going to be buying, which in what could be a counter trend in a bear market, you definitely don't want to stick around too long. But if you have the wind at your back, so to speak, then by all means, what you need to do is manage the position by raising your stop so that you don't turn a winner into a loser. But in terms of the overall macro, I think it's really important. The key right now, if we can sum it up into 3 simple things, which is really how I'm looking at it, is number 1, the long bonds. If the long bonds, which have come up in terms of the TLT in price, which means yields have fallen, if they start to outperform the S&P 500, and they're still underperforming, which is good news, but if they start to outperform, especially in the face of hawkish talk, which may or may not actually happen, what that's telling you is a flight to safety into bonds that have been so unattractive this year. That could be a sea change and be very, very negative for the market. Number 1. Number 2 is Apple, okay? So everybody has expectation that Apple was not going to report well. It sold more iPhones than anyone thought. If it breaks down now after this nice gap post-earnings, that would be a warning signal. And really, the third thing from there is to look at the whole consumer discretionary space, which simply, let's look at XRT, which has still been underperforming the indices, but yet holding some critical support here. If that stays firm, that would be actually comforting because it would mean the consumers are basically shrugging off inflation and really much more optimistic about the fact that the dollar's lower and that the rates are lower. And that may even help the housing market here because people are going to go, oh, wow, mortgage rates are back down. I better lock in now if I'm really serious about doing something. So I'd watch that because if that flips back to lower, especially if you get all 3 flipping back to lower, this market could get nasty again. But right now, fingers crossed that things are just stabilizing and consolidating here.
All right, good to know. We'll have to talk about it again soon. Mish Schneider, thank you. Director of Trading Education and Research at marketgauge.com.